Hello guys, welcome to Iycomenia-Gist TV, where truth meets drama and real stories come alive. My people, Nigerian banks are at it again. But before I go on, I want you to hit the subscribe button, like this video, share, and also drop your thoughts after this video because I'll be telling you the current and trending gist that has been going on now. Central Bank of Nigeria (CBN) has announced new rules for banks. Commercial banks, merchant banks, non-interest banks, and many others to raise their minimum paid share capital. Can you imagine? Now, they have urged all banks to meet these rules before 31st March 2020. If they don't, they risk penalties, including license revocation of being forced to merge or be acquired. Having heard this news, many Nigerians have been reacting. Some are worried, asking questions. Will I lose my money? Where will my money go? Will my bank shut down? There is fear everywhere because in past years, when banks failed to get their license revoked, depositors sometimes lost assets or needed intervention. Some people doubt whether these banks have the money to raise extra capital. Others say it is a good move. Stronger banks mean safer deposits and more confidence. Historically, when banks failed and had their license revoked in Nigeria, depositors could lose part or all of their savings if there was no adequate assurance or guarantee. One example of this bank is Heritage Bank PLC. Heritage Bank had their license revoked some time ago over regulatory non-compliance. People remembered such case with worry, so there is memory among the country when rules aren't followed. Closure or revocation is very possible, and losing access temporarily or permanently as precedent. What exactly is the CBN rule? Now, here are the new capital requirements. Banks must have this much money actually paid in or raised via capital raising by the deadline. Retained earnings, that's profits kept in the bank, some reserves, and many others, are not allowed to be used to meet the new threshold. Category and type of bank minimum capital requirement. Number 1. International commercial license, 500 billion naira. Number 2. National commercial banks, 200 billion naira. Number 3. Regional banks, commercial, 50 billion naira. Number 4. National non-interest banks, 20 billion naira. And number 5. Regional non-interest banks, 10 billion naira. Now the rules applies from 1st April 2024 to 31st March 2026. That is 24 months for banks to fully comply. Now, why such rule? CBN's reasoning. Now, this is to make banks stronger, to be able to absorb shocks, economic problems, inflation, exchange rate issues, and many others. To ensure that banks can lend more, support large projects, help grow Nigeria's economy towards the target of a $1 trillion economy. Now, this is to reduce risk in the system, fewer banks that are weak, less chance of sudden collapse and recent revocations. This is also to align Nigerians with international banking standards and risk-based capital adequacy, etc. Now, out of how many banks has complied? How many banks are okay with this rule? As of mid-2025, there are 8 banks that has fully made their requirements. Some articles earlier said that 5 banks had already made their requirements. There is a list of banks that have met the capital requirements, especially in the higher level. Number 1, Access Holdings, that is Access Bank. They raised fresh capital rights in 2025. Zenith Bank. Zenith Bank raised equity to meet the threshold. Stanbic IBTC Hold, assisted by parent company, crossed line. Wema Bank raised capital in phrasing to meet the national bank level. Providus Bank has met the national benchmark. Non-interest banks, Jaiz Bank for national non-interest category has crossed its threshold. Cost Bank, non-interest or alternative hold, they met the regional non-interest bar. Now note, the sources do not always list all banks that have met the requirement because some are waiting for CBN's confirmation. Now here are banks who has not complied and have put their banks at risk. Out of 44 licensed banks of various kinds, merchant and non-interest bank, that means 36 banks were still working towards compliance. Now those banks are at risk if by 31st March 2026 they have not met the capital requirement. Now here is the risk. Their license could be revoked. That's one. They may have to merge or acquire. Now what should banks that have not complied do? If a bank hasn't met the requirement yet, possible paths are they have to raise fresh capital through right issues, that is existing shareholders, private placements, public offers, merge or get acquired, combine or into stronger banks to pool capital, reduce cost and meet regulatory minimum, change license category, downgrade or from international to national, if allowed, to reduce capital obligation, cost cutting or improve profitability, retain earnings. But note, retained earnings may not count toward the minimum paid up capital in many cases. Seek partnership or foreign investor, being in investments, possibly from outside Nigeria, to raise fresh equity. Assurances. Should depositors panic? The answer is no. Nigerians should not panic. Safety is assured because the CBN works with the Nigerian Deposit Insurance Commission. Funds are insured to a limit so that small depositors are protected. Banks that are complete are strong. Others are being supervised closely. CBN has set the deadline, so there is no time. Even if a bank is acquired or merged, depositors' funds and liabilities are typically carried over. The acquiring bank takes over obligation. Now, the aim is to strengthen banks and not to punish depositors. The risk is more for bank owners, that is, if the bank doesn't comply. Now, I'm going to give you a summary list of banks that have met the demands and some banks that haven't. Access Holdings, known as Access Bank, has made the requirement. Zenith Bank has also made the requirement. Stanbic IBTC Holdings has also made the requirement. Wema Bank has made the requirement. Providius Bank, Jaiz Bank, Lotus Bank, non-interest. GT Bank, that's Guarantee Trust Bank, Globus Bank, and Greenwich Merchants Bank. Now, banks that have not yet been confirmed to have met the CBN requirements are United Bank of Africa, UBA. They are not yet confirmed to have met the CBN requirement. First Bank Holdings also has not been confirmed yet to have met the CBN requirement. Fidelity Bank, FCMB Bank, Sterling Bank, Union Bank, and Titan Bank. These banks are yet to fully comply to the CBN current requirements. My people, if your bank is among these ones that I have mentioned, please know what to do with your money. Act fast. Don't say I did not tell you. Thanks for watching Iycomenia-Gist TV. Don't forget to hit the subscribe button, like this video for us to give you current gists and as it is dropped. Until next time, bye for now.